Hey, everybody. All right. Shake your hand. Yeah. Thank you so much for that intro. Very creative. I don't know where you came up with that. All right. So I guess without further ado, we'll call up our fellow panelists. So of course, this is exploring the future of capital markets through second layer. Today, I'm joined by Adam Back, CEO at Blockstream, a Bitcoin infrastructure firm. Adam, why don't you come on out here? All right. Healthy applause. Next, we've got Scott Millar, founder of SideSwap, a Bitcoin sidechain for securities trading. Let's give him applause. Let's give him a round of applause. Everybody just ate lunch. We're feeling good. Next, we've got Claudio Levrini, and he's the founder of 7 Labs, a decentralized exchange built on Liquid. Claudio, welcome. Let's give him a hand. Last but not least, Arnab Naskar, co-founder of Stalker, a marketplace for alternative assets. All right, so I'll begin with a little preamble. I think as a Bitcoin historian in the space, for people who follow me on Twitter, now X, I'm an expert on a great many things. Capital markets is not one of them. So I think we're going to learn a lot today about how Bitcoin is poised to potentially disrupt this part of the market. So I know enough to know that we're talking about clearing, settlement, derivatives. Let's start broad. So what's the opportunity here, and why does this opportunity need Bitcoin? Arnab, let's throw it over to you.
So the concept of the ownership, let's take an example. Like a few years back, when everybody was kind of talking about GameStop, and they are trying to trade the GameStop shares in Robinhood realized the Citadel has a priority over others, right? And the holders, the small holders, actually just got stuck there. They cannot withdraw, they cannot do anything. And the main reason is, when the current capital markets, you are not actually owning the ownership, right? The concept of ownership is missing. And that's what Bitcoin is bringing, like not your keys, not your coins, not your same keys.
Not your stocks.
Exactly.
Mm-hmm. Claudio, what do you see as the opportunity here? Why is Bitcoin the perfect fit, in your view?
Well, I do think that, first of all, when we talk about securities, we are talking about something that is catered for an institutional audience. And when we get into that, stability and security are very important. So I think that Bitcoin sidechain has inherently some characteristics that fits better than other potential solutions to the digitalization of those stocks.
Mm-hmm. Scott, let's throw it over to you. Same question. What's the opportunity here?
Well, there's a massive opportunity. If we look at Bitcoin as being the, shall we say, settlement layer in a payment system, for it to really grow, we need to build, well, if it's the main chain, we need to build a securities depository with the same premise as Bitcoin, where you have the user ownership over the tokens so that you can transfer them directly between each other and create capital markets around them. For Bitcoin to grow, it's the way forward to build the capital markets around them. So you raise money, you build everything around it. And so far, Liquid is the only viable option. And within the capital markets, you also need the assets which you can KYC and transfer only between KYC'd users, since otherwise they become bearer assets and there's no securities regulation in the world that permits it.
So we're talking about returning the power of ownership to people. Adam, that's what Bitcoin unlocks here?
Yeah, and I think the other thing, which is just coming back to Bitcoin and people who are using Bitcoin liquidity, like buying and selling Bitcoin or borrowing against Bitcoin, that today 99.9% or whatever it is of Bitcoin trading is not actually benefiting from the blockchain. It's fully custodial. Right. And that custodial nature is what enables things like FTX.
Right, leaving with everybody's Bitcoin. So let's move over to the technology side of it. I know some of you are working with Bitcoin in different ways. Maybe we'll start with Adam and go back around. So how does the technology fit here? It sounds like this is an opportunity for side chains or second layers. Which specific second layers are being used? Why are those second layers a fit? And I think we talked a little bit backstage about why not a spreadsheet for some of these use cases.
Yeah, so obviously we work on Bitcoin only, so Bitcoin Layer 2, Lightning, and Liquid. And the why not a spreadsheet is actually a serious question some, pretty experienced developers in the Bitcoin ecosystem would ask you. And the reason is that, people have an understanding of Bitcoin, but they may not have an understanding of how share settlements work and all of the parties in there, and the lack of direct ownership, the ways you kind of lose out or come lower down the pecking order. So I think the exciting thing is to have the sort of bearer finality and the smart contract capabilities to do non-custodial trading, so that you can have derivatives without custody, Bitcoin options, so you can do limit orders, so you can say, well, if Bitcoin price falls to this price again, I'll buy some more, and have that happen straight from your hardware wallet with no custody.
Scott, we were talking backstage about just the startups that have come and gone in this area. We were reminiscing about some startups people may have heard about, R3, digital assets. There was this great wave of banking startups that were approaching the capital markets with blockchain. Why was Bitcoin, why was Liquid a better fit? Why do you think that long-term that solution will win?
Well, if you look at the R3, all of these providers, they built custodial models per bank, specifically just internal projects within the bank. There's no open ecosystem which anyone can come to as an issuer, issue your assets, have them available, publicly traded. So what we've built is actually a swap market. So anyone who holds tokens can push UTXO commitments to like a public order book, and then anyone else can pick them up, and you have peer-to-peer settlement between them. So there's no listing fees. So if you are an issuer, you can issue. You don't have to pay an exchange $500,000, or you don't have to go to a stock exchange or a securities depository. So there's a very low barrier to entry. If you're a startup, you want to raise capital and start having some liquidity and float within your shares. And within this, you have access to Bitcoin as like the global settlement system, where you can settle against Bitcoin or Tether, and without going through the normal capital market structures. So it becomes open access to everyone, just like Bitcoin provided open access without having to go through the existing gatekeeping institutions.
So open access, lower fees. Claudio, over to you in terms of how you think about it. Why is Bitcoin the right infrastructure for trading derivatives, trading stocks, trading debt, these kind of things?
Well, the main point is providing something that is very solid, that is very proven, that historically has a much lower rate of issues compared to anything else that is done today in the digitization of those legacy assets. Another important point, I think, and why we personally are very focused on the Liquid network to work on these kind of projects, is that it is important to mimic what is the current process somehow. So you have to find a way of bringing the benefits of self-custody, bringing the benefits of these digitalized securities, but at the same time you have to replicate some of the process that are involved in the normal trading, normal issuance of those assets, because you don't want to reinvent process and create struggles for those companies that want to join into this system. You want to create something that is familiar, but at the same time brings in all the benefits that you get from the ownership, the real ownership, and 24/7 access to those new digitalized assets.
Well, Arnab, I guess the question would be like, okay, Bitcoin maybe is the right infrastructure, but why Liquid versus a Lightning versus something bespoke? How do you think through that?
So I think definitely if you see the Bitcoin's layer 1, we should not bother too much. I think that's where the discussion comes in the layer 2. In the layer 2, I think the one key element, which is kind of Liquid, is very interesting over here, is you don't have a native shitcoin, to be honest. That's kind of, if you see all the EVM chains, now most of the shitcoins are classified as unregistered securities under SEC. Now you're issuing a regulated financial instrument that will have a maturity 5-10 years. That may kill that shitcoin utility in 3 years, right? So you need to think of an infrastructure that actually uses a kind of sound money concept, which is on the Bitcoin, so that will stay, and that's as commodities in most of the jurisdiction. So that reduces a lot of issuers' risk, so they can really focus on the product that they're issuing, rather than going all this kind of underlying technology infrastructure risks. That's actually one of the key elements of going for Liquid at the moment.
Well, obviously, people here are not fan of shitcoins, maybe, but there's a lot of, I think, people in the Bitcoin space who are wary of financialization, right? They see these terms and they start to say, oh, this sounds a lot like the existing financial system, which we're trying to replace and supplant. Adam, want to turn it to you. Why is financialization good for Bitcoin? Why should the average Bitcoin hodler be, excited about capital markets on Bitcoin?
Well, I mean, many people invest only in Bitcoin, so they don't own shares. They didn't buy IPOs that were offered in their country, and that's fine, right? And of course, there are people who do various forms of Bitcoin trading, either because, they need to buy some or they need to sell some to have some cash for something, and they can do it in a lower risk way, potentially, with kind of technology. For the leverage things and derivatives, if you're not doing that, I wouldn't encourage you to do it because it's high risk. But I think the big difference with using Liquid, which is like very Bitcoin-centric technology, is that you have, the equivalent of bearer asset finality. So I guess in share terms, it'd be real-time gross settlement. So in a financial world, you might not realize it works this way, but if you sell a share, the broker will just sell something he doesn't have and like maybe find the money a couple of days later, or buy the shares or never buy the shares. And so it's really kind of messy, and they can sell more shares than exist. They can have more derivative shorts than there are shares. They can have all these kind of crazy situations, which is like upfront mathematically prevented by a Bitcoin-like chain, where you can only offer something for sale if you actually, provide a signed limit order showing that you have it, right? And so that takes a lot of the risk and contagion risk out of things and removes the kind of custodial risk that, there's a rogue exchange in the mix or some high-risk DeFi that's messing things up.
So Scott, it sounds like the plan here is simple: increased demand for Bitcoin, more use cases we put on Bitcoin, more value for the Bitcoin holders. Is it that simple?
Well, if you want to really drive liquidity into Bitcoin and not just have people hodl and have a...
we don't want people to just hodl?
Hodling is fine, but if you only hodl and it's not used as a payment or a settlement network, because the use cases become somewhat limited. If you build capital markets around it, the flows that come into the markets will significantly differ. So right now, where Bitcoin is, for it to really leap from here, we need to build capital markets around it. That's when I think the next stage of the development within the ecosystem. So since we have this magnificent settlement layer, why shouldn't you be able to settle securities through it? I mean, the whole premise of being able to hold your own assets, you should have that on the security side as well, not just the payment side.
So Claudio, moving over to you, how is your exchange? It's a decentralized exchange on Bitcoin. It's not something maybe we hear about a lot. How does that differ from like a Coinbase? What does the user have access to that they don't at one of these larger marketplaces right now?
Well, what we built actually is not an exchange per se, but we took a little bit of a different approach, and we actually built on the Liquid network, which is a decentralized trading protocol. And by building a protocol, you create something which is in nature very similar to the ethos of Bitcoin, meaning that you don't have a centralized platform. You have just a way of sharing information that allows to perform certain operation. And in this case, the idea is that if you have a way of trading fully peer-to-peer with someone else, you create something which is beneficial not only for the user that knows the benefits of this technology, but it can become also a huge added values for institutions that want to interact with these systems, because the first thing that comes to mind is that you don't have to deal with the risk of custodianship. Therefore, you are eliminating a lot of the trust needed to trade on a centralized platform, because on a centralized platform you have to trust this platform not to steal your funds, not to lose your funds, not to be weak and be victim of some targeted attacks. And if you remove all these problems, and at the same time you also remove the needs for complex infrastructures and the cost associated with it, because then it's just people trading with each other, then you can present these new technologies to companies, and they basically just need to focus on what they know best, like finding a way to bring fiat currency in and to bring fiat currency out. And in the end, this is beneficial for everyone, because we live in a world where we have a lot of controls, a lot of KYC, AML measures, but no one is happy about enforcing those. And if you create a system that is just a way of interacting between users, then you take away not just the risk, but you take away responsibilities as well. So it's a potentially very interesting paradigm for an institution that wants to jump into these asset classes.
Arnab, same question over to you. How does it differ from, how does your exchange or marketplace that you're building look different than the crypto marketplaces, or maybe even the traditional marketplaces, as Claudio was saying, that are out there?
I think the traditional, if you see the current capital markets, there are very few companies actually can access the capital market finance, because the cost is tremendously so high, and there are a lot of middlemen required, which are necessarily not efficient. They're not technically required to make the infrastructure efficient. And that's where the question comes is you have created an infrastructure that relies a lot of trust anchor of various companies, and they charge you to create the trust anchor. I think there comes the question of this liquid network or the Bitcoin infrastructure and the blockchain generally. We are reducing some element of trust anchors. We are not completely eliminating the trust anchors, but reducing the certain trust anchors. What it happens is the cost of issuance decreases. So if a smaller capital raise happens 10, 15, 20 million, they cannot go to Deutsche Börse Group right now to raise the money. The cost of capital is super high there. But they can come to this alternative way and raise capital, both using the networks, both can leveraging centralized exchange, but also at a much more cost-efficient decentralized exchanges. And what it will happen fundamentally over there is a lot of these assets, that private assets that are locked in with some asset managers, brokers, and everything, they will get certain level of liquidity, and also investors who cannot access those liquidity can actually potentially get certain liquidity from the DEX and other centralized exchange. And that's actually the key element of this entire, the capital markets and tokenization structure.
So we talked about the value propositions, maybe getting a little bit more concrete for people out there. Adam, over to you. What's live today? If you were going to say this is the best success we've had on the Bitcoin capital market side, is there something you can point to? Is it the El Salvador bond? Is it something else? Like what's the big success that we've had here, and what's live?
Yeah, I mean, just going back to the risk for 1 second, another factor with centralized exchanges in the conventional world is they use rehypothecation, which is you will think, I own a Microsoft share or something, but actually they lent it to somebody else. And that can get out of control and create risk, and there have been actual failures resulting from that in the past. So then in terms of what's going on with Liquid, there are a number of different trading platforms. So the people on the stage, Scott, is with SideSwap, and they have a central limit order book. So it's actually a centralized experience, but it doesn't have custody. You just send a signed limit order, and if it gets matched, it gets sent to the chain. And Claudio does TDEX and XDEX, and TDEX is another application, a bit more of a decentralized order book. And XDEX is a new company to do more things with it. And Arnab does sort of the share registration agent and regulatory tech around it, as well as sort of capital placement. So in terms of issued assets on it, there are a number of different assets that have been issued on Liquid. For example, promissory notes in Mexico to small and medium-sized businesses, a number of stable coins. There's a mechanism for general options, so sort of what you call a covered option, i.e. collateralized, so that there is no kind of settlement risk, and it doesn't even need a price feed actually. And different sort of mining related securities, and a Blockstream mining note is one that's been in market for 2.5 years now. And shares, so SideSwap actually has issued its own shares with its own registration agent on Liquid as well. So
Scott, again, the same question, what's live, and then what is the success that you see in terms of what these might look like when they're more fully formed?
Okay, so what we've built is a wallet and a swap limit order book. So anyone who issues on Liquid is free to come and have their shares listed without any cost. And we have 2 stable coins. I think there's 6 or 7 securities that we have listed. So BMN, the blockchain mining note, is one of the bigger. We took our own share registry and did a direct listing and tokenized it as a proof of concept, gave out some shares for free. We haven't raised any money on the blockchain. We want to keep it very clean and just show a proof of concept in terms of how it can be done. And those trade frequently.
Claudio, same question.
Yeah, I do think that if you look at the environment today, the biggest success story are native assets that were born already on these second layers. But for example, the Blockstream mining node, which was very successful, and all the projects that were on Stalker, basically, they were very, very interesting examples of these native tokenizations of assets. But I do think that in the mid to long term, we will see a greater interest also in what is the conversion of existing assets into digitalized assets. And that is a huge market because there are a lot of use cases around the world where you have a lot of friction you have problems with those assets. For example, you are a very small business and you want to, but very promising, and you want to engage with investors, but you are not able to bear the costs and the structure and all the things needed to engage in normal markets. So there will be advantages for this kind of businesses as well. So I see a very big growth in the mid to long term also in bringing things that are born in the legacy world, but they want to benefit from the additional features and they are transferred to this digital way of managing securities and assets.
Arnab, same question to you. What's live, and then what's the holy grail that you're looking to build?
So we started in 2018, so it's quite some time. We're already in the market, and Stocker's main focus was to create a primary issuance marketplace where we provide the end-to-end turnkey solution for any asset issuers to issue financial assets, be it a debt asset, be it a mezzanine asset, be it a hybrid equity, right? And once it gets issued, this can be traded into multiple exchanges, which in traditional market cannot happen sometimes, right? There are a lot of Web2 platforms and investment platforms where you are issuing and trading on the same platform, and that creates obstacle for liquidity. But the vision that we are having is we don't want to create a secondary market at the moment, but we want to integrate with various exchanges like XDEX, SiteSwap, with Bitfinex securities in that regard, and then the liquidity can come from those exchanges. So that's definitely at the moment is live, and Stocker is also regulated at the moment in Luxembourg because we think as an European jurisdiction, the issuance investor anchor is very strong there, and investors like such jurisdictions, and Luxembourg is one of them. One element also I would like to highlight here, and Claudio mentioned that there will be two kinds of assets which in the next years will be very much of interest. One asset class will be completely novel new asset class that doesn't exist in traditional market. For example, what we did with the Blockstream mining node with Blockstream, it securitized the hash rate of Bitcoin mining and gave to the investors, because miners take the risk of being an efficient miner plus as a hedge fund, right? So if we can de-risk that hedge fund element and issue a hash rate back securities, investors take the risk. And that asset has raised over 40 million, is being traded right now on Bitfinex securities, SiteSwap, Merge, and few other venues. And that will mature next year. And the investors have already returned, like they've already got the Bitcoin return on that. So that's a very good instrument. We also are looking into the asset classes which are sitting on a traditional market, let's say the existing fund that has a share allocation of 500 million, but they want to issue another share class that can be purely tokenized for a new investor base. That's definitely is a huge opportunity. So these two assets are very much exciting, and I'm quite eager to talk anybody who's thinking of issuing such kind of assets.
Well, that brings me to my next question. It was essentially, why haven't we seen more Bitcoin companies take advantage of this if this is live today? Arnab, I'd like to keep that with you.
It's coming, actually. To be honest, the market education is key. The education, like we are already building for last 5 years, right? And we know this market is 5-10 years line, because patience is key in the market. We saw, like, if you are doing for a short-term product and then the FTX kind of situation happens, right? So that's reality, right? In certain markets, you have to be slow, you have to be agile at the same time, but you have to be grounded on what is the reality, what you can do. And that takes time, is because this is a highly regulated market. There are a lot of incumbents doesn't want this kind of technology because that eats from their pie at the end of the day. So the market is growing, but the quality of issuances that are coming and the quality of issuers, these are not the issuers that they cannot raise in normal market. They are coming here to experiment, to create a future-proof business model. And I think that really is interesting, and we'll see more and more assets from the Bitcoin side of the world, but also from the other side of the world, which requires access to capital.
Well, I want to just stick with regulation for a second. I think you've brought it up a few times now. I'm curious, I mean, these are markets that we traditionally associate with being regulated. What has been the experience that you've had with regulators, and are you working with them directly? What part of the system is regulated, and where are the interface points, Adam?
Actually, Arnab is the expert on this stuff.
We'll keep it with you, Arnab. It's your show.
No, the regulation, if you see, I will talk about currently the European market, because that's I'm currently looking much more. In last 5 years, a lot of things are happening. Like you have the MiCA that is coming in the European market. That's the next year, but it deals with crypto assets which are not securities. And we are discussing about securities that falls under existing MiFID, that is European capital market laws, that deals with the normal stock market. And we are issuing a Stocker, and all the assets that we have done together, they're all MiFID instrument. On the exchange side, there is a very interesting stuff happening. There's a pilot regime. It's a new regulatory regime that allows exchanges to trade securities without a CSD. that will change the market, and that's what Scott also highlighted. But also we are seeing jurisdiction like El Salvador, jurisdiction like Kazakhstan, AFC. There are a lot of these emerging markets will also bring different regulatory framework, and I think for those jurisdictions it will be easier because the legacy structure is not there, so they can create very efficient regulatory environment from scratch. So I'm quite positive that a lot of regulatory environments are changing in a positive way to adopt this kind of technical developments.
Did you have to work with regulators when you issued the mining note? I mean, how was that experience, Adam?
So we outsource it all to Stocker. So that's why I said you should ask him, because they have a lot of...
That's the business model there.
They have a lot of licenses and legal regulatory expertise in the European Union. So they have different kinds of financial licenses.
So we're really talking about the platforms are really where the regulation is, and maybe on the protocols, that level it's not there. Maybe, Claudio, you can add some detail?
Yeah, absolutely. I mean, in this specific case, of course, the further you get from centralization and the traditional way of operating in these industries, the more you get complexity. Because, and I think this is very relevant also when we think about the fact that we see oppositions, meaning that these new products, there is no demand, is taking off very slowly. The truth is that today security laws are widely different from country to country, to jurisdiction to another. I mean, there is a huge difference, so it's incredibly difficult to find common ground in those terms, especially if you then add this technical complexity of having to explain what you're doing, how you're doing it. It goes through regulator compliance, so I think that is a very, very hard work, and it is something that requires time. The important things that we see is that there is a very clear path ahead. There is a growing interest, and there is a lot of markets developing around this, but it does take time. So we shouldn't expect this to be like the new gambling protocol that comes out and people are just making money, like double your money or lose everything. This is something that starts from a very regulated and very complex field, and it is growing steadily. I think that's the most encouraging thing that we see.
Scott, anything to add there? Or?
Well, on the regulatory side, like Arnab, what they offer, they're a financial institution, so they're allowed to keep the assets on balance sheet, and they can manage them through the liquid network to keep track of the share registry. In our case, with our own share, and we have an SPV in Sweden where the board of directors is allowed to maintain the share registry, and there's no rules or regulations around how you manage it. So we use the liquid network to keep track of the shares, and then we just allow them to trade peer-to-peer.
But is the average end user of these platforms an accredited investor, or they can be anybody the world over?
Well, in terms of having a share in SideSwap, or even an account with Arnab and Stokers, so that they can whitelist for the BMN and other assets, you need to KYC, because obviously with the securities regulation, only KYC'd individual can hold them, but once you hold them and you trade them, there's no requirement, at least in our case, on the board of directors to do any AML checks if shareholder A sells to someone who's KYC'd. That's normally done through the banking layer, but there is no banking layer in this instance, so I think regulators have a bit of catching up to do at some point, but it's not there right now.
Well, we've got 2 minutes left here. I wanted to wrap up with a question of, we've got a lot of developers and builders out here in the audience. What are you guys excited about in terms of second layer developments or just technology developments in Bitcoin that can help improve these types of services? Maybe Adam, we'll start with you.
Well, I think Liquid has proven itself as a kind of area for innovation that ends up making its way into Bitcoin. So there have been a couple of opcodes that were available first in the Elements, the open source part of Bitcoin. And something relevant to these kind of financial instruments and smart contracts is Liquid has a governance mechanism which we can use to implement partial limit orders and call options and things like that. So that's interesting on Liquid. Bitcoin, you don't need a call option because there's only Bitcoin.
Right. Scott, any technical developments that could unlock what you're doing or enhance?
Well, there's a big development, and many thanks to Blockstream for making it happen, but they have made it possible to make swaps through Jade, so we've done that. So hopefully in a week or two, you should be able to do swaps directly from your hardware wallet without having to have a software wallet online all the time. So that you can trade peer-to-peer swaps, even against Tether. It doesn't have to be securities. So it's basically a non-custodial exchange. So it's not just securities we need, it's also bearer assets that can trade peer-to-peer against each other.
Claudio, next 5 years, what do you see?
Yeah, I think that from our point of view, the important part is that everything we do, everything we've built at the base protocol level is fully open source. Everyone can use it. We put out some reference implementation of all the different components. So what we really want to see is people try to experiment and integrate our protocols into different kind of services. And I hope to see something that I cannot think about happening using our tech.
Arnab, to you?
Is I think the most important and interesting stuff I will see, like we will see in the next 5 years, is those assets right now that is being issued, these securities, these are real-world assets behind them. They will be used as collateral, and that will be interesting, lending, borrowing, and that will be creating a very interesting infrastructure. And that also use the element of swaps and all this kind of non-custodial features. So that's fantastic, and I think that will be very exciting. Maybe I want to add also one thing.
Yeah, you're having a meetup, right? Or
yes, tomorrow there is a roundtable that is being hosted around 11 a.m. It will be 1.5 hour roundtable, and there are a lot of ecosystem players of the liquid securities. They will be there, and who are developing on top of the Bitcoin. And if you are interested to learn more, enter into the rabbit hole to see what can be done, what is interesting is happening, feel free to join. It's an interesting roundtable. There are a lot of interesting speakers are there, and it will be an open conversation also. So I would like to invite everybody who is interested there.
Including some live demos, right?
Everybody, let's give our panel a round of applause. This has been Capital Markets in Bitcoin. Thank you.